The video. Super excited to be on today's live stream, you guys, as we're going to be talking about some really stellar information that's coming out. We can see some market spikes as of right now. As you guys can see that the market has been moving a lot. We took some profits. We had the Great Britain Pound trade, Australian dollar, which we took profit. We have 56 pips there. We had 49 pips on the Great Britain Pound trade as well. So we had both of our Great Britain going to be around a swing trade. So going into today's analysis, you guys, I just want to talk about these crucial days between the weeks. So I know that I talk about specifics on market structures and different market analogies, but today I'm going to be going into sections. Okay, so it's going to be a little different, and it's going to be something that I really believe that you guys are going to like. So first we're going to erase all of this information that I have here. And just let me know if you guys need any questions, or if you guys need me to go something throughout this live stream. Please feel free. I'm going to be completely coherent with you guys and be able to answer all your guys' questions as well. So moving forward, you guys, I'm going to be talking about breakouts, midweek reversals, and I'm going to be talking about weekly and daily, or weekly highs, weekly lows, and I'm talking about the retest elements and structures. Okay, I actually wanted to go onto my other platform to be able to show you guys this, just because Traders View has a hard time being able to map out. They do session breakouts, but I'm going to do the best I can, and then tomorrow and then for future videos, I'm going to show you guys on MT4. I'm going to show you guys on another program that I use for my weekly setup. So just to let you guys know that I use a couple different programs to schedule in trades or to look at positions. So essentially, I have Traders View, which I look for a lot of these things, right? They have great price indicators where price percentages are, what the dates are going to be acquiring through these elements right here. As you can see right here is beautiful work. I can be able to see where price is going to using that 250 pip interval that I like to use. I also use the date. So when I like to see session breaks, I like to see how long the market was consolidating in a certain area before a session break, because then I can put that into my back testing portfolio, and then I'm able to have that analysis for later on. And then I also use a lot of things. But for another one that I used TC2000, which is a huge and really good broker I like to use. And I like it because it does have session and daily breakouts already established on there. And I'll be able to go forth with that in future videos with you guys. So getting straight into it, we know that it's Tuesday, and I'm just going to do the best I can with the calendar on the right-hand corner, and then I'm going to be able to answer any of your guys' questions. And thanks you guys for being on today. Hey guys, hey Justin, hey Michael, good to see you guys on today's live stream. So getting straight into it. So as we can see, market price, and we're going to start with the euro dollar, because euro dollar is obviously one of the biggest pairs, you guys. We know that 32.6% of transactions are yearly are the euro dollar, and then 82.5%, and it could be roughly 86.9% of transactions are the US dollar. So right now, this is one of the best trading currency swaps or currency exchanges on the forex market. As you guys know, it's traded on the ECB market, which, if you guys don't know what the ECB market is, the electronic connecting broker. This is where all the banks and institutions basically manage all their portfolio for their clients and all of their hundreds of millions of dollars. Okay, so whenever you're trading in the ECB market, it's been provenly statistically that it has a lot more ADR, which is average daily range, so you can get more lot of liquidity. Like Michael, you like to do the Great Britain Pound Japanese Yen. That's a trade that we're talking about. I said yesterday we did a trade on Japanese Yen, Great Britain Pound Japanese Yen. We got around 49 pips available on that trade. And then we also did the Great Britain Pound Aussie dollar, which we did some nice pips on that as well. So moving forward, you guys, I'm going to be talking about some stochastics, how the market indicators work, and we're going to go straight into the market. All right, so first we're going to pull up a stochastics chart, something pretty simple. So it's something that I like to do whenever I'm looking for a huge divergence or I'm looking for market. And I don't like to use this one just in case. It's just something that I personally don't like. I like to have a little simpler one. Simple for me is like, I'm just going to use an RSI on this one. So RSI is pretty simple. So all I like to see is essentially where I like to see a divergence is from a structure price low or structure price high. So hey Zane, how's it going? Good to see you as well, man. Hey Twitch 123. Good to see you guys back. Yeah, I'm so glad to see you guys on here. So I hope you guys are having a beautiful day. I know here in sunny Santa Barbara, it's around 70 degrees. The birds are out chirping. and it's a beautiful day. So that being said, you guys, we're going to go straight into this. So as you guys can see, that the market had a divergence from this previous low where we're in, and I'm going to talk about relatively where price breakouts and stuff are. So I'm going to actually map this out because I don't want to just talk with you guys understanding. So first off, I'm going to be talking today about, and the predictions as well are going to come with this. So I'm just going to just map it out first. So we're going to talk about weekly highs and lows, market breakouts, market consolidation, breakout, and we're going to be talking about midweek reversals, and then we're also going to be talking about, oh yeah, session changeover. Not really more session changeover. I'm going to have to do that on my other platform with you guys, which is going to be cool. It's going to be actually a full hour of that, so I hope you guys are ready and excited for that as much as I am to give it to you. So weekly highs, market breakouts, market consolidation breakout, midweek reversals, and then stop hunts. We don't really need, because you guys are very aware of stop hunts. I know that you guys, I mean, you guys are literally better than me at this stuff now. So so I'm not going to go really more to stop hunts that much, but I'm going to actually just add it just in case. So these essentially are the things that we're going to be mapping out today, and we're going to just do it on price action right now, just so we're not have to go through like previous structures and stuff like that, because you guys can do this on your own time as well. But I want to do this as long as I'm live with you guys. I want to show you guys exactly what I mean by a lot of these different market scenarios. I'm going to put this on the left hand corner for you guys to see as well. Okay, sweet. So I set my RSI at 80-20 7 period. Is that okay? Yeah, it's totally fine. 80-20, 80-30, or 70-30, it's totally fine. Anything that's, so all this means is that over justified optimism and under justified pessimism, right? So essentially it's the same thing as price being oversold or overbought, right? Over justified optimism and under justified pessimism are essentially the same thing. It's just a more elaborate term like people like to use because people think they're smart by using elaborate terms. But it's all evidently the same thing, and it doesn't make you any smarter than the next person. So like that being said, you guys, I wanted to talk about this divergences. Oh, market divergence. So market divergence is another thing I'm going to be talking about as well. So market divergence. Whoops. So, okay, market divergence is another thing I want to be talking about. So market divergence, you guys know what a market divergence is. It's basically when your price is going one way and then you have your indicator going another way. So essentially it's just making a cross parallel to it. So it's making a divergence. So as you can see here, I'm going to go to the 4-hour chart and show you guys exactly where this divergence happened. So then you'll be able to understand where I'm coming from. Okay. So as you guys can see, so let me just map this out a little easier. So as you guys can see, price is moving lower right here, right? So this is more so essentially of a hidden divergence because price is still essentially, or sorry, indicator is essentially still going lower. But as you guys can see, there's a huge velocity of angle, excuse me, from this area to this area. So this area to this area was showing a very strict downwards trend, right? So a lot of banks and institutions were obviously dumping money at this area and moving price into that market structure, which then basically made price move lower and lower. But then as you can see, the RSI is showing a little different, where the RSI, and I'm just going to move this up a little more for you guys. So as you guys can see that the RSI is now a little different, where the RSI is essentially putting price a little lower, or it's moving the opposite way. So think of it like a trampoline, right? So think of this like a trampoline. So think of the RSI as a trampoline, and then think of price as a human, right? So the human's jumping, right? It's humans making, bouncing, right? And then say that you get double bounce, right? So you know what trampoline, if you guys did gymnastics, or you guys know what double bouncing is, right? It means that you have someone putting the opposite pressure momentum off what you are putting into your the pressure that you are building is someone has the exact opposite pressure or more to make you obviously go 10 times higher, right? So this is what essentially a divergence is. It's like a human jumping on a trampoline. So this is little old me. I'm jumping on a trampoline, and I know this is a stick figure, and I'm jumping down, and then once I hit that area, market price is not liking that area, so they double bounce me. So then they shoot price up a lot quicker than it was for me to fall down, right? So I'm going up 10 times faster, 10 times higher, and so forth. So I know that's kind of a bad analogy, and obviously, you know, my science wasn't that up to par and that correct, but you guys get the gist of what I'm trying to say, is that market is going to be going the opposite direction. So whenever you're looking for divergence, essentially, you're going to be looking for when stochastics or RSI is opposite of price. So for a bullish divergence, right? For a bullish divergence, you're going to be looking for lower lows in price, okay? So price is making lower lows, but then your stochastics or RSI are making higher highs, okay? So then once you see the stochastics is making a lower low, you see price making a lower low, then you know, and stochastics or RSI, whatever indicator you guys use, MACD, is making a higher high, which is over here, then you know price is probably going to go the opposite direction of where it was, right? So that's what a divergence is usually makes. So would you recommend using a stochastic RSI on a shorter time frames when they're looking? So no, that's a great question, Justin. No, I don't. Or if you're talking, I don't use RSI or stochastics if I'm not looking at a 4-hour time frame or higher, right? So for me, for instance, I'm not really looking for a specific like breakout area, because you guys know I'm a price action trader. I essentially don't use a lot of indicators as to make where my more momentum is going. I look for market psychology and market statistical data and market behavior. So for trend, yes, right? So usually when you're having a trend, right? So I want to answer, Justin, your question before I go into Zane. So to answer your question, Justin, you can use stochastics, but you got to understand that your indicators are more credible with higher time frames, right? So a divergence isn't really going to be essentially that credible at a 15 or 30-minute time frame. It can break straight through that or lower. It's a possibility, but you want to be using these indicators at higher time frames, and essentially you want to be using lower time frames to be doing scalping by looking at psychological levels, by looking at structure, support, resistance, and different zones to be making a firm trading decision. So I'll go into that later on in today's video, and I'll be able to define that more so. So for a trend, yes. So for a trend, that is a great question, Zane. So for a trend, you want to be looking for bullish and divergence or bearish divergence at the end of a trend or at the beginning of a trend. So for instance, as you guys can see, we've been in a downtrend for some time now, right? So this has basically been a confirmed downtrend. We had the swing low, and then we had a range, right? This range was essentially not even a trend because we're making lower lows and lower highs. It's a micro trend, but it's not really a macro trend, right? We're making, this is basically a range between 1,000 pips or a little higher than 1,000 pips, right? So for this instance, this is a channel. We're not really talking, we're trying to break out of this channel, right? So to have a bearish divergence at the end of that second leg is a huge confirmation that trend is possibly going to make a defined statement that price is going to move higher and break out of this previous area of this downtrend, which we have established, right? So if we put, you know, an EMA, which I like to use a 200 EMA, right? We can put the 200 EMA, or we'll put a 200 EMA there, as you guys can see. Let's just move this EMA. Come on. Price sometimes doesn't want to work with me. So there we go. So visibility, style, template. So that being said, price is in a bearish trend. As you guys know, when price is, and I'm gonna put some notes on here for you guys. I'm just gonna put them like as visible as possible for you guys to have. So price below 200 moving average EMA, bearish market, right? Excuse me, bearish market. All right. So then, if price is below, right? Price below 200 EMA, we're in a bearish market, right? So for a good period of time, we're in a bearish market with price. So that moving forward, when price is in a bearish market, we're looking to basically only short, right? We're looking to short and buy at the lows, and we can use the the counter trend trading strategies, but we're not going to get into that right now. We're just going to go straight into the mustard of it. So moving forward, so we can see that price is moving to essentially it bounced off the second leg here, made that divergence as we saw earlier with the RSI, and then made a huge spike to the upside, right? Made a huge run for about 250 pips, if I'm not, or 300 pips. I'm not sure. Oh, yeah, 150 pips, okay? So 150 pip run, right, to the upside. So now this is basically half of what price interval we're talking about between 250 pips. So if we're looking to go 250 pips, we're looking to go up to the highs of here, right? So where does price like to do? That's why we're talking about market, right? That's why we're talking about weekly highs and lows, right? Why am I saying that? Because the market likes to work off weekly highs and lows, monthly highs and lows, because that's where it breaks and retests. So this is where the 250 pip interval is at that previous high at January 10th, right? So we're going to be going back to those previous highs. So what are we seeing else, you guys, to showing you another thing? A moving average crossover. A moving average crossover at the 200 moving average as well, and price is now consolidating and making that 200 angular support a very, very determining factor for a buy position. So amazing thing, you guys. So what are we seeing here right now? Just this price right now, we're seeing three things. We see one, bullish divergence, right? Two, moving out or price breaks 200 EMA. EMA makes support, right? Number three, price is a 250 interval, right? Interval. So 250 pip interval, right? So these are three validations, right, that we could take to make a credible trade that now could make us more confident in what we're doing, right? So are the four market cycles seen on every time period or just higher time period? That's a great question, Michael. So no, all the four market cycles are on all time periods. But like I said, the higher the time frame, the more credible. So for me, for instance, when I'm looking for the structure of the market, I look at the 4-hour chart, right? I'm looking for that structure. But then once I want to make a trade, I go to the 15-minute to make my trade, right? I want to go to the smallest interval that's possible for me to make a precise measurement on my, my risk to reward, right? My risk management. Thirdly, I want to be looking at what the volatility and the volume of that day is, right? So I want to be looking at the area of price where price is moving and how I'm able to understand how that momentum is flowing correctly, right? So that being said, we can see that price is now moving to the upside after we see three confirmations. We see a bullish divergence. We see price breaks 200 EMA, which is here, and it makes the 250 intervals. So that's why we went long, right, on the Euro chart, and that's why we didn't go short, because we knew that price is going to be, it's already the end of the month, okay? So the end of the month. So when did price hit this area, right? It was basically on the 9th, right? And we're already on the 29th. So the cycle is probably where February, right, is going to want to retest this high, right? February 4th, February 5th, right? The new moon, right? The new moon, and we'll talk about the new moon, is because a lot of this area is going to be a major support, but we're not going to get into that because I don't want to confuse you guys too much, okay? So moving forward into this, and I'm not saying that I'm confusing you guys, I just know that a lot of this is a lot of information. I mean, even for me, while I'm speaking this, I'm like, okay, I can sound like I'm confusing myself. So moving into this, let's just go back to what we were saying earlier, right? So price can move to the downside or just keep on shooting up to market highs to retest the monthly highs of this previous month, right? So what we're going to do is just look at where price has been previously and see if this is valid, right? So monthly highs, right? Whoops. Highs. January. So this is January highs. And then look where we're at right now. At the end of January, we're already at the halfway point or a little more than a halfway point for that 250 interval back to the upside. So that being said, if this makes sense, you guys, we're looking for these areas, right? These weekly lows, these weekly highs, the market breakout. Where is the market going to break out of? This is a perfect area for the market to break out of, right? Why? Because there's not a lot of volume here. It's the end of the month, right? The market is going to be at the end of the month. What happens at the new, or what happens in the beginning of the month? They have a whole spread of percentages they can go now, right? Each month has a percentage that they can go between areas, right? They can't go like 3,000 pips one month and then go like 1,000 pips the next month. That doesn't work like that. They have a average daily week, a day. They have an average daily day, week, and month. So they have a specific range that they have to abide by the algorithm that the market has set on. They can't go super high and they can't go super low. They have to be flexible. So they're not going to break certain structures until that next month. That's why we're at this high, and that's why it's consolidating at this area, because the new month is gonna happen, and we're gonna have what we're gonna have, you guys, a breakout, right? A breakout. So that's the next thing, is that we're gonna be waiting for that breakout to happen, and that's gonna be a confirmation of price, right? So market breakout. So then market consolidation is what we're seeing here. Market consolidation is an area where price is consolidating, building up pressure, right? Building up that momentum, and then giving these sellers time to sell the market because they think that price is going to, retrace to the downside, and it possibly could, right? I'm not a guru. I'm not a genie in a bottle. I can't predict price crazy, but just off statistically looking at this up over and over again, you'll be able to define and know when price is going to make those moves and stuff like that. So after I already see this, excuse me, my throat's a little apart. So after I see this 200 moving average, right, I don't want to go short right now because I already see market having stability right here. Stability right here. Why would I want to go short when market's already going higher? So then possibly this would be a stop hunt, right? So that's why I wanted to talk about stop hunts with you guys. So hopefully you guys are understanding what I'm talking about right now, and hopefully I'm not going too fast. Let me know if you guys need me to, go over something and establish something. So, okay, they are only a certain amount of pips per time frame. Yeah, exactly. So yeah, per time frame, per week, and per month, especially, they can only do a certain amount of pips. And they can't just like go 1,000 pips in a week. They can't go to 1,000 pips like in 2 weeks. Like they have to have a understanding, because we got to understand that there's a lot of, remember what we talked about previously, there's pending orders, there's stop losses, and there's trailing stop losses all available, right, that are going into the market right now. So what we're seeing is that we can't always go the direction of where price, or excuse me, we can't always go the direction of where all the price action is going, because that could be considered a market stop hunt. So that being said, I don't want to go in too much in depth with that, you guys, because I want to save that for later. But what I want to say right now is that price has then going to possibly move to higher highs, right? So that being said, I'm going to just erase a lot of this drawings right here. I don't want to confuse you guys too much with a lot of this information. But that being said, I just wanted to be able to go over some of these things before I predict price and before I move future trading, and before I'm just able to go over the market predictions, just so you guys understand just some of the formalities that I use, and just other things as well. So moving forward, that's why we're long Euro USD. We're also looking at gold, still very long. We had that bullish breakout even after we got out of our position. So we didn't get back in the position, obviously, because market could have took a downwards turn. So we just closed that position, but then we can see market prices moving even higher. It's probably going to test that higher time frame of, probably wants to test that 115 or the 315 area, which is probably where it's going to be heading. So after it hits that 315 area, we're going to then be able to have that validation, right? We're going to see that correction to the downside, test those previous lows before we move up, and then move to higher highs. That's our hypothesis for gold. We're going to obviously adjust this in the near future if obviously the market price doesn't go the way that we believe. But as we can see, the moving average crossover again, guys, you see this moving average crossover? It's super valid, right? This moving average crossover we see, and then we see a bullish spike. That's why we see Euro USD, when we see this bullish crossover once again on the 4-hour chart, right? We're going to see a breakout, right? Because just like we saw gold do the same thing. We saw gold do the bullish crossover, right? And then it broke out of price, like literally broke out of price and then skyrocket to the upside. So that's why we use these validations for trending, right? We're using it on trends. We're using it to reverse trend, and we're using it to make a nice position and nice trade, as well as making some nice positions. So what about Brexit big drop in price? That was the setup. So keep rolling in knowledge to our ears. Oh, thanks. I really appreciate it. So what about the Brexit big drop in price? That was a setup. Gold is the market up phase. Gold is a market up phase, looks like. Yeah, exactly. Nice job, Michael. So what are you talking about? The Brexit big drop? Are you talking about this area right here? So price dropped from this area. So essentially where price is just making, it's just making a short position right now. We had an area where price is just making that confirmation to the downside, retesting lows, basically saying, hey, are you all good down there? Yeah, I'm all fine. You can go back up now. And basically price is just going to come back up and then retest and move higher to higher highs. There's nothing really big on this. It's just basically, you know, this is a nice little drop, you know, a nice 4-hour drops to the downside. If we go to the 15-minute chart, we'll see a nice spike to the downside right here. It's just a market stop hunt. They're just trying to get traders to go sell. Hopefully you guys had a trailing stop on our Great Britain pound trades earlier today that we have for Great Britain pound JPY and Great Britain pound AUD. So hopefully you guys caught the profit before this huge breakout to the downside. Like you guys say, that, you know, stuff happens, but no, this is just a market stop hunt. Nothing big. This is basically just inducing the sellers to go short, having that fear, and then after that, it's going to retest and then move back higher, price back to the direction it was previously. So hopefully that answers your question with the market update for the Brexit big drop. So yeah, so that being said, you guys, there's nothing to fear right here. I mean, we're still in a bullish trend right here. Nothing to fear in general with that. I'm still confident that we're still going to be going long in the near future. Same with the Euro USD. This is going to take a little bit more time. If anything, we're going to be, this is a perfect time to buy. So if you're looking at this price and you're seeing price this low, it's a perfect time to buy. And I'm going to wait for the right position to buy, because if you guys look at it, we're still booming above moving, right? We're still bullish, right? This is still a bullish momentum. We're still got a lot more market price to move up to the higher formations, right? So we're still going long. We just have to find the right entry to go long. But this is right here is all opportunity. I just see opportunity right here. So I'm looking for the right area to get onto this buy position so I can get it without any drawdown. And I'm going to put that in the Discord what available. So that's really great to know and really good stuff. So know when Brexit happened several years ago. Oh, when the market. Oh, okay. So I thought you were talking about Brexit. And I'm like, oh, that was interesting. I don't think there is a Brexit. I think this is just a retracement. But yes, so no, when Brexit happened several years ago, what about the big Brexit drop? That was a setup. Yes, exactly. That was a setup. You're right. Exactly, Michael. It was a setup. So, you know, not to go too far back into that because we covered that last time, but to answer your question, you're completely right. So we can go back to previous structure and price, right? We'll go back to the daily chart, and we saw that huge drop in price, right, between here and here. This is the Brexit deal, right? This whole liquidity. So basically all this is this, you guys. So I'm just going to map it out what these Brexit deals do, right? It's a liquidity trap to the upside. It's going to confirm price, and then it's going to shoot price up for a stop hunt, which means liquidity price is going to be trapped, right? Or price liquidity is going to be trapped. I don't know why I said liquidity price, the same thing. So, so stop hunt to the upside, trap price, pump, stop losses. That's all it was. Give it validation, give it some propaganda, give it some confirmation of fear inside it, right? Move for what, 46 days, consolidate price, make spikes to the high. After you get enough liquidity trapped, then you push market price to the downside, right? And then what exactly do? You work off this zone, because you don't want, because there's still people trapped in this area right now that like don't want to get out, right? These are like heavy investors, right? Heavy big traders, right? They don't want to move lower than this area, right? Because there's a lot of stop losses in this area. A lot of people want to get out of their positions. They're like, get me out of here. Like, I don't want to be up here. So they're not going to move lower than this area, right? This is all trapped liquidity, right? That's why price only spiked this little level right here, because they don't want price to be moving that, right, that low. Why do you think the moving average crossover is happening right now? Because they're just trying to trap them before they move price higher, right? They don't want to go any lower than this. This is probably going to be the low. We can see this is already the peak formation low. We're going to see consolidation to high. Then we're going to see a market anchor leg, consolidation price, and then we're going to move up higher to retest previous structure of these highs, right? So that's my analysis previously for market structure and so forth. So it looks like a sharp of an axe with a handle on downside. Yeah, that's a really good analogy. It really is. So yeah, it does look like a sharp of an axe. So yeah, so guys, there's nothing to worry about. Honestly, if anything, I want to get into this position as a buy. As we can see, price is definitely be moving to the upside in the near future. We just have to be very worried, and that's why I use the 15-minute chart, you guys, to find my entries, because if I'm looking at it from the 4-hour chart, I wouldn't be able to see all this, the same thing, just like I saw previously, right? I would have saw, like, you know, how it looks smaller from that time frame, right? It looks a lot smaller than this. So I have more validation, right? So this is a free fall, right? So what does this free fall mean, you guys? I put that in the algorithm aspect on the market structure, right? Free fall means look for psychological levels. So we're going to look for psychological levels here, and we can see that the next psychological level, right, is 750, right? Let's see if this is the first level it's going to have a support. If this is the support area, we're going to buy. Wait for the second support level. If it breaks this area, we're going to put the next psychological level, right? Which is going to be 500, right? So then if it breaks this area and it tests this area, then we're going to go and buy here, right? So you can never like have such a hard time finding entries if you have a free fall aspect of this in this nature. All you got to look for is a psychological measure in markets, that 250, that 000, that 500, right? And then you'll be able to have that validation, right? Because look, our price is already having that restraint to move even lower, right? So what do you want to look for? Never go on the first candle to the downside. Always wait for 3 candles to form before you make a position. Reason being, look for morning stars, look for evening stars, right? Other things in that nature. Oops. Sorry guys, had a client call. So that for that instance, you guys, we're looking for these different elements to be able to take our positions, to be able to formulate our price, right? So we can already see that this is the 15-minute chart. So we're not going to be taking this trade for a little while. Probably going to wait until Tokyo session to look for Tokyo session, because this is probably going to be the low of the week, right? So moving forward, the low of the week, you can see here, low of the week. So this is going to be probably the low of the week. So we're going to look for price to reverse out of this area to make a substantial profit. Like, these are the times where I make the most money. When I see a stop hunt, when I see price moving into an area that is free falling, but there isn't any validation of this, right? It's just trying to stop out all these previous traders that have trailing stop losses. Because look at how long it's been trading for, right? We have all these trailing stop losses from previous structure areas, like here. Trailing stop losses, trailing stop losses. Okay, time to hit all the trailing stop losses, consolidate price, and then keep on going where we're going, right? That's why market goes up and down, you guys, because it's the same thing. Make trail stops, hit stops, trail stops, hit stops. That's all it does. That's why the market works in the way it does. So moving forward, you guys, I just want you guys to know that, you know, a lot of the stuff that we see is just smoke and mirrors. It's nothing to be like, oh, wow, it's going to bearish, right? You know, this was a nice, hopefully you guys got out of this trade and you didn't get stopped out. That would, and you guys, you know, took some profit when you had the profit available. But, you know, that being said, we don't want to be super like scared if the price does drop in this area or price does make it slow down or this downward trend. So moving forward, we're going to look at other prices. We already went over, you know, we can already see, look at here, that the euro-dollar is going to be making a breakout. This is probably going to be the weekly low as well. And you guys asked that, how do I find the weekly low? It's usually between Tuesday and Wednesday. The weekly low is made. The weekly high, the weekly low is made usually between Tuesday and Wednesday. This just because I've seen it over and over again. Price likes to, usually Tuesday and Wednesday, price will come into an area. So I'll just map it up to you guys. So Monday is a trap day. So Monday trap day, basically it'll consolidate price. And then Tuesday will be like a run day, right? Price will run. And then Wednesday will be that high or low. And then Thursday will be the reversal. And then Friday will either be a trap day again, like it will trap the market of previous structure. So the next week will be, it will like open up higher or open up lower. And then Friday will either be a rush day, right? So price will then rush, because you guys can see like a lot of times, sometimes Friday, price will then just rush and move to different areas. So Monday is a trap day, consolidation of price, as we can see here. This is Monday. Tuesday, right? Tuesday's today. We'll see a run day. So as we can see on Bitcoin or even on Bitcoin, right? So Bitcoin was a run to the downside. We can see that, Great Britain pound, you guys can see that this was a huge run, right? This is a run day. And then Wednesday, right, is usually that weekly low. So that's why I said previously that weekly low has been formed. And then Thursday is that reversal usually, right? Price likes to reverse from whatever direction it was going. And then Friday is that trap day, or it's that rush day where it keeps on running in that direction after it reversed. So all this stuff will be in also the program as well, you guys. So it's going to be a lot of stuff to take in. But after you guys just firmly, I'll have it note by note, picture by picture. Like you'll understand this. Like I'm telling you, within like 3 weeks, you'll be better trading than I am, because you guys have fresh eyes, fresh mind to this stuff. And it always works the best when your subconscious mind is completely fresh to this stuff, and it doesn't have all this other bombarded knowledge that you've been able to acquire over your trading career. Because like a lot of this other stuff, you don't want to get confused, right? Because confusion happens when you have this too much knowledge. That's why it's good to know something and just be good at it, than just to be like overly ready for something, right? Because then you just get confused. So moving forward, you guys. So with that being said, Australian dollar is the same thing, making that lower formation, right? It's going to have the low, right, of the week. We can see that price is probably going to break to the downside, make that double bottom, which is that W formation, right? We have that crossover, and then after we see that, we're probably going to see price move up back to the upside, maybe this week or next week for sure. That's when we're going to see price probably consolidate and move back to the high. So we're going to be looking to get those nice Australian dollar, because I'm telling you guys, we're going to make a lot of money on Australian US dollar this year. It's going to be a huge capital gain. I've been researching, backtesting like crazy, and it's pretty self-explanatory. There's not a lot of crazy things that are happening, so it's going to be some really nice profits there. So if you guys have any questions at this time, please feel free to put in the Discord. After that, I'm going to be just going on to a client call. I have a client call after this, but I'm going to be on the Discord. I don't see any setups right now. As you guys can see, that we basically made our profits and our runs are happening. But for tomorrow, I'm going to be definitely, if we see that Great Britain pound trade start to reverse to the upside, and if we do also see the Great Britain pound Japanese yen, as we can see already right here, right? So we got in at this area at this previous high, but structure earlier than that, we got in over here. So then we can already see price is going to be moving to the downside, which means that Euro USD is going to be moving to the upside, and then we're just going to see just a lot of more pips, you guys, just to gain. So hope you guys enjoyed today's live stream, and I hope that you guys got a lot of knowledge out of today as well. So I will see you guys in tomorrow's live stream. We're going to be talking about the average daily range. I'm going to be using another program as well to show you guys how that works. And I'm going to be having some keynotes out of the program to show you guys a little quick pick of that, so you'll have those specifics as well. So have a blessed day, you guys, and much love. Talk to you later. This is Brenton with Traders Profit Club. Talk to you soon.